Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are Friday together with our listeners, and I'm looking out to absolutely beautiful summer morning here in Vancouver.
Bob, we have lots of interesting headlines to go through today. The first one, U.S. banks face $1 trillion reverse repo headache. What is a reverse repo for people who don't know, and why could this be a headache?
Well, let's call it a money market exercise. Difficult to explain, but at any rate, it seems that in anything like a stock market or commodity markets, but also within the credit markets itself, in a speculative fury, everything gets pushed to the limit. Hey, and then it reverses, and all of a sudden these guys with their repos or swaps, they're on the wrong side of history on this thing. So this is the fascinating part about the conclusion of a great bubble. Although stock market gets all the headlines, there's a whole array of speculative issues going on, let's call it below the headlines. And this is an example. So it's all part of the system, the whole financial system beginning to tighten itself up after the excesses of a bubble.
German cities are turning off hot water and cutting their lighting in a government move right now, or this is in government buildings, but I'm sure they're encouraging private people to do the same thing.
Yeah.
The story behind that, Bob.
Well, it was a long time ago when President Reagan was in office, and his advice to Central Europe was don't get reliant upon Russian pipelines for petroleum or gas, natural gas. But they went for it, and then now they're being hung out to dry. Now, the other problem is even under Angela Merkel, who actually, well, I looked her up ages ago, she's a PhD in physics, and the whole German nation, led by the government, became hysterical about nuclear power. So then they were shutting down nuclear power, and they're going all for the intermittent solar and windmill thing. So, they just went crazy. So now they really are in a bind, and the government is making gestures to try and help. But also, I believe somewhere in an article elsewhere, they're bringing on coal-fired electrical power. They have to. So one thing about it is the Russians turning off or turning down the natural gas taps are getting Europe into a more practical point of view. Now, France has always, for some reason or other, had a practical view on energy, and I think about 75% of their electricity is generated by nuclear plants. So, but no, the problem is ideologues in Europe becoming reliant upon Russia and then shutting down reliable sources of power. So I think this is going to be, we should take it as an education. But anyways, this is a gesture. It's doing something about the symptoms. Turning off the lights and turning off the hot water in government buildings. What a nonsense.
Bob, the French learned their lesson back in the 70s when OPEC turned off the taps and there was an energy crisis. I was in Paris in July 1979 for Bastille Day. Terrific party. But I went on a City of Lights tour that night.
Yeah.
All the lights were off. The Eiffel Tower was not to save energy.
Yeah.
So the French learned their lesson. You have to be self-sufficient, and that's why they're behind atomic power.
Yep.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Our next headline, nearly $200 million drained from the latest crypto heist. I thought blockchain was supposed to be secure, Bob.
Yeah, but they've got hackers, and then all of a sudden, $200 million disappears. So, but was it canceled, or did it end up in somebody else's account? My guess it ends up in somebody else's account. And it shows what can happen when you get into a really crazy mania, such as Bitcoin and cryptos. And gosh, I've been playing around in the Vancouver Stock Exchange for decades in junior mining companies, and I know about speculation. And but you can start a junior mining company for maybe 25 cents a share, and if you look after things and got a good story and look after your expenses and do some drilling, you might get a stock play out of it. But what you have with these Bitcoins and cryptos, it costs huge amount of electricity. First of all, to create them, and they've got, all kinds of wonders, according to the participants. But essentially, they became a counter to play in the stock market game. And you've got not just the huge electrical costs of creating these things, but you got the huge electrical cost of maintaining them afterwards. And probably the next break in the stock market, probably after August, could take the Bitcoin and crypto sector down to where participants in it realize, hey, this is a losing game. So I think many of the promoters originally will probably walk from it as best they can. But there's been nothing like it in financial history. You had the South Sea bubble in 1720, and the key stock in London was South Sea Company. And in a year and a half's time, it went up by a factor of 10. Then in 1929 bubble, the big deal was Radio Corporation of America, RCA. Same thing. In a year and a half, it went up by a factor of 10, and then crashed all the way back down. So, but with Bitcoin, the percent gains were monumental, orders of magnitude beyond a 10 bagger, and with huge market capitalizations. So it truly marked the greatest bubble in financial history. It is truly amazing, as this old historian watches it with only the perspective that history can provide, and it has been staggering, absolutely incredible. So it'll be interesting to watch it fail.
And a friend of the show, Eric Haddock, points out, he's the guy who really studies cycles. He's noted Bitcoin seems to mirror the S&P index. If it's going up, so does Bitcoin. When it comes down, so does Bitcoin.
Yeah, I think it's all part of one speculative pulse. Yeah.
Headline, federal government adds $114 billion of income on student loans. However, it could also lose $200 billion on that loan. What's the deal there, Bob? Is this typical government, Bob? Yeah,
well, they went into the student loan business. Oh, hell, they probably had dozens of reasons in helping out students. And if you have a student getting into the workforce, they'd be friendly to the party that introduced the thing. But I don't recall at the time when student loans were first introduced that the government expected to make a positive return out of it. And this study done by a watchdog agency pointed out that they at one time expected it was sort of like a little over $100 million return out of the loans they were making to students. And then with this article, the watchdog agency goes through all the numbers, and it looks like they could lose almost $200 million on $1 billion on the scheme. So I'm telling you, whatever government does, they'll turn to lead.
A headline I noticed today, Elon Musk says he believes inflation is about to peak, and he's basing this on declining commodity prices. Is he right?
Yep, we did that in June on energy prices. The headline was, "The bear gets everything, including energy prices." So that was crude oil And particularly, the most exciting one then was the gasoline prices in the U.S. And that was quite a crack. So, the commodities, you use the CRB index, kind of peaked quite strongly in May, June, and is in the process of breaking down. Now, one of the things about this latest rally in commodities is that the pundits did look at the amount of credit that the Federal Reserve and other central banks were pushing into the system and assumed you'd end up with rising prices. And then they also looked at when they put the great shutdown, the lockdown, would reduce goods and services. So it was a recipe for rising prices. But the problem, and we pointed this out earlier in the year, is that the street seems to know only one kind of inflation, and that is U.S. dollar down, commodity prices up, real things up. But indeed, there are two kinds of inflation. You get the inflation in tangible assets, but then the other one is the inflation in financial assets. And I mentioned the gains in the crypto Bitcoin were without precedent. Now, there's another thing in the financial side with, and we're going to call it inflation and prices, is that the German bond price, the 10-year note a couple of years ago, got bid up in price, down in yield to where it was trading, I think it was almost minus 1%. A negative nominal yield has never happened in history. So these two events say that we had hyperinflation in financial assets. So then this is where history comes in, Jim. If you look back, the first big bubble, the South Sea bubble, was 1720, and then that action crashed, the liquidity disappeared, and there was a lengthy contraction. And then the next one, 1772, 1825 was a huge bubble, and again a financial contraction followed. 1873 was another magnificent bubble, and then of course we all know about 1929. So what has occurred now with our financial mania, excesses much greater than clocked in 1929. So it's a classic bubble, and it's deflating. So the point, here's the other one, is that decades ago, and I don't know where I found it, was a definition of inflation. Now, let's first of all mention the orthodox definition of inflation is rising commodity prices and rising cost of living. But as we point out, that's only one item. The other is inflation and financial assets. So the definition is that inflation is an inordinate expansion of credit, which you get with the boom in commodities and which you get with the bubble in stocks. So you have one definition that applies to both kinds of inflation. And all I know, Jim, is that after every great inflation in financial assets, everything deflates, heads down. Most asset classes head down. And I think we're seeing this. The CRB commodity index peaked in May, June. Also, some of the huge darlings, like the immense squeeze on nickel, straight up and straight down, and then you had the exotics like uranium and lithium and cobalt. They're all kind of peaked, and not much going on. So what I look to now is another feature of a post-bubble contraction is the senior currency becoming chronically firm against most other currencies and most commodities, which sort of is happening. I mean, just a little while ago, the DX got up to 109, and then it's corrected to the 106 level, and the chart is still uptrend. So our target on the next phase of distress in the financial markets would take the dollar index up to about 120. Now, hey, that's going to cause a little stress out there, and particularly if you're trying to service debt contracted in U.S. dollars into New York. And it's very difficult going from servicing debt from a weak currency into a strong currency. So actually, going back to the 1550s, Thomas Gresham, one of the great traders in history, he was financial agent for the British government in the money market in Antwerp. And this is where a number of his letters of advice to then let's call him the financial exchequer, explained this problem is once a boom is over and everybody's got too much debt, the serious problem is servicing debt from a weak into a hard currency. And he helped out the British Crown immensely. So we're seeing stuff. This, although the dimensions are huge, it's a great bubble, and there are many features in common with each of the great bubbles. So I think that on our outline for the year after August, you could watch for another credit crisis to appear.
The last headline that caught your eye: Spanish Prime Minister proposes ditching neckties to save energy.
Well, as we talked about it, Jim, I thought, now how is that going to save energy with putting them on, or save energy in manufacturing them? And I think you had the right idea.
Dr. John Blatherwick, Vancouver's former medical health officer, said to me in a heat wave, the first thing you have to do is ditch that necktie, because a lot of your body heat escapes there. That means you use less air conditioning. Yep.
Yeah, I used to know that when I was skiing. We used to wear the roll-top collars, and spring skiing you get a little warm, and it was hard to shed heat that way. So then I got off of roll-top neck shirt for pullover for skiing, and had a zippered front one. So then as you got kind of overheated skiing, you could just undo a few zippers, and losing heat from your neck and your throat was it works very well.
Yes, and don't forget, the necktie is just a modified scarf.
Yeah. Jim, I'm so glad you informed me on that one. Yeah, well, there we are. Avoid neckties.
When it's hot.
Yes.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Bob loves to answer your questions. You can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.